You are already knowing what it is. We are back once again with them Hollywood trades. We are on NASDAQ right now. I'm going to do a short. I'm going to do a little more this week than I have been. I want to do all of the major pairs right now. So we're going to start with NASDAQ. We're going to go over to gold. We're going to go to EU. We're going to GU and DXY somewhere in between all of that. All right, so we're gonna make this quick. As we know, last week we basically had an inside, and I already put this here: consolidation range expected after the BOS. This being the BOS point, I don't have it marked. I guess I should have it marked because I'm more so focusing on this whole balanced price range here, and so that's what I'm looking at. I don't expect it to easily blast through the BOS, through this, and then keep going without mitigating. We have to let go of shorts because shorts have been piling on. We are at the max stochastic on, if I'm not mistaken, on weekly, on daily, and on 4 hour now. And of course, the 4 hour can get a settlement like it did here, and then of course, right, boom, go up, then go down, and then we'll be able to break that structure. But as of right now, we are going to stay where we are inside of the consolidation range, as far as I'm concerned, because we haven't had that mitigation. I'm gonna mark, yeah. What am I gonna mark this as? Just a regular sweep at this point. So with that being marked like that at this point, uh, um, that's pretty much that. I mean, I'm not gonna go down any time frames because it's pretty much pointless. Once you look at the daily, you're pretty much seeing what it is. I mean, I'll go down to the 4 hour uh right here just to show this gap right here. Try to look over anything I may have missed, but pretty much there's this gap there that needs to be filled. So we can pretty much expect that we've already closed underneath the highest candle, and then we have a new bearish gap as well. So I am in at the top of the stochastic will just remain bearish potential. And so you'll see in the Hollywood Trades Price Motion Handbook how I talk about that. Pretty much with these stochastics, the bearish potential is going to be a lot steeper here because you're not going to get a lot of institutional buying at the top of multiple stochastics. We see what happened here when we got this dip. This is a Fibonacci expansion, retracement expansion that failed the break here. And so there are marks that I could put in here, like consequent encroachment, sweep. Of course, this was the one of the primary breaking candles, and we just failed to close over this. So I'm very curious about that motion right there that happened. We'll call this. We'll also call this a sweep. What sweep? That's pretty much what that was as well. So that's the wick that broke this initial consolidation, and then every consecutive wick was failing that level. So not saying that we won't go back over that level, but we do need a mitigation, and then we are back below this weekly level as well. So this is very organized structure. We do have a bearish fair value here. So with that gap being there, we need to monitor that. If we get back above that, it should be used as support as always with all gaps. This right here is the bearish block that did the manipulation. So this block has the liquidity in it. So this is either going to be used as a reclamation zone where it'll reclaim the zone really fast to get down here, or it will use this as a mitigation zone and use this fair value plus this fair value gap right here as a nice little Fibonacci retracement. I'm not going to measure anything. We're just going to monitor these zones. These zones are really neat right now. And so this liquidity, and this liquidity exist within this. So this could be take profit, take profit, take profit. inside of this right here, inside of this mitigation zone. This is the weekly balance. So there's a lot of liquidity here. This is also a weekly level. So in between this range, we'll have to monitor what will play. But that's pretty much all I have for right now. This is our zone that we're going to be pretty much focusing this week. Is going to be between here and here. This is an internal range from here to here. So we're still playing this internal range from here to here this week. That's what we're going to deal with. If we do get a nice mitigation, we could hit this and then go straight back into the highs because we are bullish pretty much essentially. So with that bearish potential on the stochastic, we're going to watch that, but these fair value gaps are usually coded to give us another return back to the highs. And so we'll watch this gap and this gap here. I don't have this one marked because I'll more so be using this level here to monitor that, these levels and this level here. So that's pretty much what we'll be watching. There's some type of slippage here, slip, then another slippage right here. So something around this level is giving us a lot of liquidity to play with. So this is going to be a very key zone right around this weekly balance point. And so we'll watch that. We are, like I said, failing. We're failing. Actually, I don't have it marked, but that this high pretty much is what they've been failing to close over here. So yeah, that's pretty much that. And we're gonna go over to gold next.